Hey, that's not me. Okay. So it is today's tax talk. Today's tax talk. I'm your host. I'm attorney Stephen Leahy. A little bit of technical difficulties there. It seems like I have a lot of those, isn't it? Well, welcome to December 28th. It is Wednesday, December 28th, the year of our Lord 2022, coming to an end. I've been wanting to talk about this for a couple of days now since it broke. I think it was last Friday or last Thursday, and I just hadn't had a show. Did the Crypto Tuesday yesterday, so I didn't get a chance to talk about it. But the IRS has called on delaying the 1099 rule. And that's what we're going to talk about today. Won't you join us? Well, again, I think this is it's kind of an amazing turn of events. It's not really amazing. I predicted it. I've been saying all along that they're not going to implement it. And here's the thing that I keep getting to. I think I've come to the conclusion that they never wanted to implement it. It was a budgetary trick from the very beginning. And also, now the IRS, there's lots of stories about this for the last 5 days. And, as you know, I get the Google alerts about anything with the IRS, and there's just story after story about this delay. And it's really been part of the news for the last couple of months. Remember the Illinois congressman who had proposed changing the rule to $5,000, the threshold from $600 to $5,000. Recently, Manchin and another Republican senator came out and proposed a $10,000 jump, and then the IRS, but none of those proposals were in that that big bill that just passed that had everything in the world in it. They didn't have that in it. You'd think they would have agreed about that. I thought for sure they would by the end of this year. And then I thought, well, maybe one of the first things that new Congress will do, and they'll make it retroactive. The problem is all of that paperwork had to be out by the end of January. And so by the time Congress got around to it, they wouldn't be able to do it. And then the IRS stepped in and said, "Oh no, we're gonna take care of it." I don't know if they have the authority, to be honest with you. I mean, it's the law of the land, and they're saying they're waiving. They're waiving it. Again, there's lots of stories, but we're gonna go right to the source, and then we're gonna talk a little bit more about this, about the funding, and why I think it was never meant to be, because. But we'll get into that. So let's first go to the story. This isn't the story. First, let's go to the story. The IRS announces delay for implementation of the $600 reporting threshold for third-party payment platforms, Forms 1099-K, and this was issued the 23rd. So what was that? That was Thursday. The Internal Revenue Service today announced a delay in reporting thresholds for third-party settlement organizations set to take effect for the upcoming tax filing season. As a result of this delay, third-party settlement organizations will not be required to report tax year 2022 transactions on a 1099-K to the IRS or to the payee for the lower $600 threshold amount enacted as part of the American Rescue Plan of 2021. As part of this, the IRS released guidance today outlining that calendar 2022 will be a transition period for implementation of the lowered threshold reporting for third-party settlement organizations. That would have generated Form 1099-Ks for taxpayers. The IRS and Treasury heard get this. The IRS and Treasury heard a number of concerns regarding the timeline of implementation of these changes under the American Rescue Plan. This was almost 2 years ago that they put this in. Said Acting IRS Commissioner Doug O'Donnell, to help smooth the transition and ensure clarity for taxpayers, tax professionals, and the industry, the IRS will delay implementation of the 1099-K changes. The additional time will help reduce confusion during the upcoming 2023 tax filing season and provide more time for taxpayers to prepare and understand the new reporting requirements. So it's the taxpayers that have to understand it. It's the confusion for the taxpayers. So the IRS is doing us all a favor, so they tell us. Okay, I'm always skeptical when a government agency tells me they're doing it for my own good. They're helping me. But I don't think that that's what's happening. But we'll get into that in just a minute. The American Rescue Plan of 2021 changed the reporting threshold for these third-party organizations. The new threshold for business transactions is $600 per year, changed from the previous threshold of more than 200 transactions per year, exceeding an aggregate amount of $20,000. The law is not intended to track personal transactions, such as sharing the cost of a car ride or meal, birthday or holiday gifts, or paying a family member or another for an household bill. It's not intended for that, but we all know that that was going to happen. That was inevitable. Under the law, beginning January 1st, 2023, the third-party organizations are required to report third-party network transactions paid in 2022 with any participating payee that exceed the minimum threshold of $600 in aggregate payments, regardless of the number of transactions. These third party reports these transactions by providing individual payees an IRS Form 1099-K, payment card, and third-party payment network transactions. The transition period described in Notice 2023-10 delays the reporting of transactions in excess of $600 to transactions that occur after calendar year 2022. The transition period is intended to facilitate an orderly transition from the third-party tax compliance as well as individual payee compliance with income tax reporting. A participating payee, in the case of a third-party network transaction, is any person who accepts payment from a third-party settlement organization for a business transaction. The change under the law is hugely important because tax compliance is higher when amounts are subject to information reporting, like the Form 1099-K. However, the IRS noted it must be managed carefully to help ensure the 1099-Ks are only issued to taxpayers who should receive them. Impossible task. In addition, it's important that taxpayers understand what to do as a result of this reporting, and tax preparers and software providers have the information they need to assist taxpayers. Additional details on the delay will be available in the near future, along with additional information to help taxpayers and the industry. For taxpayers who may have already received the 1099-K as a result of the statutory changes, the IRS is working rapidly to provide instructions and clarity so that the taxpayers understand what to do. The IRS also noted that the existing 1099 reporting threshold of $20,000 in payments from over 200 transactions will remain in effect. So who cares about the law? Who cares what the rules are? We changed them. We're the IRS. We have the authority. We can change the law. I don't think they really do. But here's another one, and I'm going to tie this together in just a minute. The IRS delays reporting requirements on digital assets from brokers, but not businesses that receive digital assets in excess of $10,000. The Infrastructure Investment and Jobs Act was passed in 2021, much like the American Rescue Plan, and contained two provisions that target the reporting of digital assets. The first new provision required additional reporting from brokers. Under prior law, brokers of securities were required to report the sales of securities made by their customers by filling out a Form 1099-B with the IRS to detail the sales of securities made during the year. The infrastructure law expanded the definition of broker to include any person who, for consideration, is responsible for regularly providing any service effectuating transfers of digital assets on behalf of another person. This provision is broad enough to require reporting for transaction by software developers, protocol developers, and validators, many of whom have no access to the information they would be required to report. The new law was applicable to tax returns required to be filed and statements required to be furnished after December 31st, 2023, which would include transactions occurring on or after January 1st, 2023. In an announcement, the IRS stated that the Department of Treasury and the IRS intend to publish regulations specifically addressing the reporting of digital assets by brokers. Brokers will not be required to report or furnish additional information with respect to dispositions of digital assets or file any returns with the IRS on transfers of digital asset unless those new final regulations are issued. The second provision of the infrastructure law requires reporting of the IRS from any person who in the course of their trade or business receives more than $10,000 in digital assets in a single transaction or series of transactions. Those businesses must file a Form 8300 with the IRS to report the transaction. This provision was previously limited to businesses that received cash in excess of $10,000 in a single transaction or series of, so cash, and they changed it into cash and digital assets. The requirement to report cash transactions is buttressed with steep penalties. Penalties apply for the failure to file Form 8300 with the IRS and the failure to provide a copy to the named taxpayer. Failure to comply can result in penalties up to $3 million a year, or the greater of $25,000, or the amount received if the failure is due to the intentional disregard of filing requirements. Willful failure is a felony. To date, the IRS made no statement with regard to delaying the effective date for reporting the receipt of more than $10,000 in digital assets in the courses of the trade or business. This reporting is set to become effective January 1st, 2024, which may explain why the IRS chose not to extend this deadline, because it's not there yet, right? I have another, this is just another New York Post article about the same thing. I think the rule amounts, and they say very much, but yet the rule needs to go away entirely. There's no reason to burden online platforms with more work, nor make mom and pop sellers and folks looking for earn a few extra bucks online worry about potential new audits and petty additional tax liability. Indeed, there's some signs of bipartisan support to kill it entirely. That would be good. Here, I wanted to point this out to you. Here it is. This was a story that I reported on earlier in the year. The IRS destroyed 30 million paper tax documents. An audit by the Treasury Inspector General for Tax Administration was found that the Internal Revenue Service made an intentional decision to destroy an estimated 30 million paper filed information returns in March of 2021. They found this out in May of 2022. The American Institute of CPAs released a statement in response to the reports of destruction of documents at the Internal Revenue Service and their subsequent response. The vice president commented, considering the struggles the IRS has faced in keeping up with the returns processing the last 2 years, the recent report highlighting the revelation of the IRS destruction of 30 million documents last year has been concerning. IRS management's decision to destroy information return documents due to the processing backlog raised numerous questions regarding IRS's decision-making and risk assessment process. The IRS's recent statement provided some of the answers, but American taxpayers deserve to know why this decision was made and how it might impact them. The IRS should continue to operate with transparency on this issue. Well, they didn't. So I'm not going to get too much, but I just wanted to point that out to you because it's not about the confusion. It's not about the confusion of the American public or the taxpayer. It's about first, I think that they never meant to because they only wanted to use these changes for the Congressional Budget Office scoring to show that they raised money. See, we're doing this. It's going to raise money and it's going to pay for all of these additional expense things that we're going to pay, right? The funding. Remember, the American Rescue Plan was almost $2 trillion. It was $1.9 trillion. And they had to come up with ways to pay for it. Well, one of those ways to pay for it was the reduction here. I think it was $80 billion over 10 years that the IRS was supposed to gather from this change of the law. Well, if they don't change the law, they won't get that $80 billion. Does that mean we get to go back and change the American Rescue? No. They've already spent that money. The money that they were required to account for before they can pass that law is now gone. They've already spent the money, and they're not going to get the funding. So all that does is go back to our deficit. Right now, we're just going to borrow that money, $80 billion. I know it's not a lot of money when we consider trillions that we're behind. But, 80 billion here, 80 billion there, turns out to be a lot of money in the end, doesn't it? And so this, I have these, now when they did the 80 billion or the 30 million, the 30 million returns that the IRS destroyed without processing. This was in 2020. 2021 they destroyed them, but in 2000 they were for 2020. And in 2020, the IRS produced, let's see if we can come up with this. The IRS there were how many returns were filed? 3 point, let's see. That's not good. It's not blowing up. There was 3.4 million information returns produced that year. 3.4 million. Billion. 3.4 billion returns with the B. Billion information returns were issued to the IRS. And that's where the IRS said, well, we only got rid of 1% or 30 million returns. The next year, and we don't know what happened. Did they process all the returns? We don't know. They did 4.7 billion returns, a 25% increase or more over the previous year. Get that now. So the IRS, and then with the change of the 1099-K, the additional information returns were said to be in the billions. Okay, so they can't process 3.4 billion returns. They certainly can't process 6 billion returns, even if it's done electronically. Now, most of them will be done electronically. A small sliver, as we find, 1% is 30 million documents that were destroyed. If it goes to 4.7 billion and 1% are destroyed, that's 47 million documents destroyed. That's 1%. Maybe they'd have to go more than that because they just don't have the capacity. So when they tell you that it's because of your confusion, I don't believe it for a second. It's not about your confusion. It's about the IRS and their ability to process them. It's plain and simple. So anyway, I can go on like this forever because I get so excited about it. I just think our government should be transparent, right, and tell us the truth. If they can't process them, they should tell us they can't process them. They shouldn't make up some story that we, the taxpayers, are just too confused. We just don't know how to handle it. And so, they're doing us a favor. They're doing themselves a favor. It reminds me recently when the IRS came out and patted themselves on the back because they were giving a big change to the tax brackets and raising them, right? And then it turns out, that's done by law. It had nothing to do with the IRS feeling bad for inflation or trying to help the American public. They had to do it by law, but they wanted to take credit for it and say, look, we're helping you. And the Biden administration was also caught trying to take credit for it when, in fact, there was no credit there because it was a law that was implemented in the 70s when we had very high inflation and what they called the tax bracket creep. Okay, so it's done by law. Just same thing with the Social Security. The Social Security beneficiaries just got a big raise. not because the government feels sorry for them, but because by law they have to raise it according to the inflation rate. That's just the way it works. So thanks so much for joining us. I appreciate you taking the time. I get so excited about this stuff. I know I'm kind of geekish. You're geek. So anyway, remember, like and subscribe. We need your help to get this out there. So please help us like and subscribe. And remember, if you are fighting the IRS and you don't know what to do, the first thing you should do is get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. That's freeirsbook.com. Get your free copy. I will pay for the publishing. I will ask you to pay for the shipping and handling. It's under $10. Okay, and so get that. Go to freeirsbook.com. Deal with your IRS problem today. So again, thanks so much for watching. I get so excited. Sorry. Anyway, God bless you this fine evening. We are out. Oh, let me go to the right one. We are out.